Hello guys, welcome to another market review. So let's get straight to business with US oil. There's a conflict going on right now, and that means that US oil is likely to open with a gap. Um, I don't know where, but probably in the 70s. So that's something to take into account. But one should not get carried away by the fact that we're opening with a gap, because the last time we opened with a significant gap was here, and it was the high, the end of the last conflict we had between Israel and Iran. You can see it here, right? So the market opened with a gap on Monday, and you have this massive bearish engulfing. See it on the hourly. It really looks funny. Yeah, look at that. Yep. And then you know that the war is over. So when you have a gap like this, I think the reaction you want to look for, that gap is very important. If you are bullish on the market, you don't want that gap to be filled. Maybe just fill half of it and rally. So, because if you feel it, the likelihood of prices retracing the whole move is very, very high. So, because if it's going to open with a gap, that's something to really take into account. And the reaction to the gap is more important than the gap itself. So, what happened last week? Um, I was cautious because yes, we had a weekly bullish engulfing. This was last week, where we were going into last week. Sorry, but it was an SFP of this high, so that's why there were some mixed signals, and we were also into what I believe is resistance. So if you look at the daily price action, we basically developed inside bar candles, which is not great when you have a weekly bullish momentum and bias. You want that to continue, not you don't want price to stall right there into resistance with this uh, big wicks and small bodies. And so the inside bar basically tells you that volatility is coming. So you want to watch out for which side of the compression is stacked first, and if that provides a reaction. So we basically had little to no price action or significant movements up until Thursday, and price had just been compressing there. If you look at this high before we broke out into this resistance, it was exactly the level that stopped price from going lower. And not only that, but when you look at the daily time frame, you see price closing inside the inside bar, inside this range created by the inside bar. So that is a bullish signal, and in my opinion, the freest trade that week was longing once you saw price close inside on Thursday, and you just had to buy a pullback and target these highs here. I mean, holding along over the weekend, it's probably gonna pay some money, because I think it's gonna open up with a gap into the 70s. So yeah, that's what basically what happened last week. So now I can get rid of this, and let's think about how we trade next week, because there's gonna be volatility for sure, and trading breakouts is something very dangerous. That's why I was speaking about longing oil more like a position than uh, a fast trade when we were around here, thinking that if we swiped these lows here or this one's here, and it was a golden opportunity, and it was indeed low. I did not expect that to happen, but I just knew that it was a good opportunity just by looking at how frequent these rallies tend to be. They happen every 6 months to a year, so that's why if you do the maths, looking at this, looking at this one, even though we're in a downtrend, you get counter trend rallies in that space of time, right? So oil has been in a downtrend for 4 years, and right now this price action is suggesting bullishness. There's no other way to do it. So yeah, all these times, everyone that's been getting hyped when price was pushing up into resistance or even closing above it, um, they basically got fucked. I think the context is a little bit different now because the more sold off you are, the more likely the bounce and the real trend is to happen, right? I haven't done the maths, so I don't know how much oil tends um, to crash before it develops another massive trend. But this is a 55, 56% drop. So yeah, nothing like this one here, but who knows? Maybe where we are about to see oil start a trend, and this move sort of holds this trend line, and you start seeing a move towards the 80s. So as I've said, I think if you are not positioned long already, um, I think the best play is to watch out for the price action at the open, how price behaves when it opens with a gap, how it reacts to that gap. And so let's go into the hourly and draw something so that it's clear. So let's say price opens around here, right? You don't want to see this, right? This I think maybe price bounces from here and then just sells off. This is the bearish scenario, because as I said, you don't want the gap to be filled. This is really bullish, in my opinion, right? If it did this and then went into the highs, then yeah, of course, but it's going higher. But I just don't think that's going to happen if we fill the gap. So what I want to see is price opening by here. If you're bullish, fill some of this, covers, and basically you start seeing it trading higher. So in my opinion, if it rejects from the gap and closes back inside where it opened, right? It's gonna go higher, and this is not easy to trade, but you basically want to look for certain price action once it looks like it's rejecting from that gap, and also how it's behaving once price is back at the opening price. Uh, if you have a bullish engulfing or a big wick, right, that gets bought and back inside, that's your trigger to basically get long. But I wouldn't put size on this. I actually don't think this is as clear as it was back in 2025, where you had this range here, very well defined range, and you see we had no daily closes above this range high. Then we had this one on a Friday. You have 2 days of some consolidation, and then you have the trend up, the move up. Now it's a bit tricky because we haven't really closed above the last swing high, which is this one, right, into resistance, and we have some wick here at what I believe is resistance. So simply not as clear to me. But yeah, I mean, there's no denying that this is consolidation, and this week here into this last high before we broke out, it just looks like it reaches of this small range, right? So the price action is, I would be surprised if if the next week is not bullish, because everything is leading towards that. And basically indeed all the bearish price action here on Friday in one single day. So that's important, and also something that I use whenever I have to look at the bias for the next week is when did this was a bearish week up until Thursday, up until Friday. So when a market changes the direction on a Friday, probably next week is going to remain in that same direction. So there's a lot of things to really be bullish on oil next week. But yeah, I've also given you the scenario where it opens with a gap, fills the gap, bounces, pushes back inside. Yeah, the war is over. The war is over by the time you fill this gap here. So those are my views on oil. Now let's jump into Bitcoin. This is my chart. So yeah, let's go for the weekly. Last week I drew this inside weekly bar, and I said I think the risk to reward for longs is horrible here. For shorts, it's horrible here. Hence, why I think that longs make a lot more sense. And I gave you the reasons for that. 50% drop from the highs, momentum slowing down, inefficiencies to the upside, not so much to the downside. Yeah. So last week we had this weekly candle, so we were trapped. And I said, I'm waiting for a failure of the pattern to the downside. So that means trading below this low here and closing back inside. And that's exactly what happened. And good thing is that we haven't taken out these highs. So if we now go into the daily, I think this is looking very constructive to the longs. Just look at how these two lows are being used by the market as a pivot now, and we're closing inside, and we've closed the week. We are closing the week, sorry, back inside that range. So I think this market is going to go to 71k at least this week, and I would be surprised if we take out this low. I'll be very, very surprised. So also, there's something to think about, and we've just started a new month, so there's a very good argument that, you know, February was this scandal here, and it was going to remain bearish, but and because it's very, very hard to change the direction of a candle just at the last minute, whether it's daily, weekly, or monthly. So now that we are in March, I think that because the risk reward for shorts is horrible here, and this this price action below these lows has been bought back up into the range, and we've sold off 50%, and the momentum has slowed down. I really think that the longs are very, very high probability here. So in my opinion, just wait for the weekly open. If we get any dip into these lows and trade back up, I would get long here and take this as the low of the week and trade into these highs at least. But if you look at the daily time frame, this level is important, and we haven't had a single daily close above this level. But I think the market is really, really gonna gravitate towards here and here because we have imbalances when you look at the H4. So I think that price is very likely to do this during the month, right? So for next week, I think 71k is a very feasible target. Maybe next week we close above this zone here, and we can use this as support and long into 75k. But from here, I would expect price to reject or stall a bit and then trade into these highs. And because we are counter trend trading, we have to take into account that this is a 30% rally, which is, it can happen. It is certainly feasible, right? But it is very likely as well to be the high of the month if we trade into 80k, 81. So that's my view on Bitcoin. I can't really see a scenario for the shorts unless we have a daily close below these lows. So that's oil and Bitcoin covered. Let's go for gold. We nailed gold because we mapped this low, which was the last low before we broke lower significantly. We had this massive deleveraging event, and this low created an SR zone, very significant one. You can see how the market failed to close above it here, and this just broke lower, resistance, but by the time that price came back there, it was closing a weekly candle, changing direction on the last day of the week, right into that level. So the weekly looked like this, very fucking bullish. I remember saying this, there's literally no one that can look at this chart and say this is not bullish. So it was very hard for me to see a short scenario from this level, unless we traded above here, just like we did, and then broke lower. Then yeah, I was very convinced that we were going to trade into this level again. But you can see that the trigger that I provided was, sorry, because I believe this level is a pivot. You just want to see price rally from the weekly open, and when gold rallies from the weekly open, it normally doesn't like to change direction. So if you buy a pullback, you're very likely to be buying the low of the week, and that's exactly what happened here. And yeah, then it just rains and closed even higher on Friday, just like oil did. So really, I think that gold is going to continue higher next week. The target for our long was here before we broke down massively, and yeah, because it was the only naked level where we hadn't retested a low. So I was expecting the market to maybe stall around here, but gold is another market that's very likely to open with a gap up on Monday. So again, the same principles that I applied on oil apply here. So the reaction to that gap will be very, very telling. But yeah, I can't really see the reason for the short, but I don't have a plan on this just yet, because if you were long here, then I really don't see how you can get long here, especially when it's gonna open with a gap. Very likely into resistance, because I think right here a lot of people are gonna pile in into shorts, and you're gonna see price maybe reject from there, and maybe that's the trade. Maybe that's the trade. If we open with a gap and stall around here into resistance, mind you, the all-time highs, having a gap open here, then it's very likely to just sell off. So that's something that also happened on the euro. Right, the euro opened with a gap here into a key level, and look at that, boom, immediate sell-off into the weekly open and fill of that gap. So I know it sounds kind of contradictory, because you want price to rally from the gap and not really give it much time, just retest, boom, and not even feel the gap. But it is a real danger when you're running into resistance and you have a gap down. But yeah, so let's see. It's much better to reassess once we see the Monday open. But yeah, we'll reassess next week on this. So now I wanted to cover EURUSD, and again, last week was horrible for trading. Very low volatility, 70, 60, 67 pip week. That's horrible in volatility terms. I was waiting for the downside, and before I go on with the euro, still want to pick up the DXY because we still have a weekly bullish divergence, and there's no reason to ignore this. So if you look at the euro, you have it as well. Even though my opinion is not as clean, you still have it. You're making high highs with the RSI going lower. So I still think that the short USD is a very, very crowded trade. But we have to look at what price is doing right now. And even though nothing really happened last week, I was expecting a break below the yearly open, because I'm thinking that there's good inefficiencies here to be filled, and that's where price tends to gravitate towards. But that didn't happen. We made a lower on here, and just when you look at the daily time frame, last week you see how price treated the weekly open as a pivot and basically sold off, reclaimed it, and then you had 2 days where it traded into that level and closed above. So when you look at the hourly structure, even though we haven't made a high, in my opinion, it looks constructive towards the upside, because we made these lows here, this low, and then this one, and it looks to me like it is compressing towards the upside, and it, this is a market that's very likely going to open with a gap lower, and it might be good to look for reasons to buy into the monthly open, because the euro is one of those markets that if you have a bias, and right now my bias is long just towards the monthly open, I think that if it opens with a significant enough gap, maybe toward below these lows here, and you see trade below the weekly open, then reclaim it, you can get long towards these gap filling. But maybe there's a good argument to hold it into the monthly open. And there's a lot of instances where this works, and you have to go into the 15-minute, 5-minute chart to really trade that, because it happens during the Tokyo Open, and you have to be really fast with it. Because by the time you wake up and trade the London Open, the move has already happened. But it tends to be a free trade, right? If your read on price action is right, and we open around here, or maybe even lower, it would be like 40 pip gap, and it's very likely to, if this is the weekly open, trades a bit below, reclaims it, it's very high probability that it's gonna fill that gap, and then very likely to also keep going higher. And if it trades into here and reclaims the last weekly open, I think that's another reason, because it's a pivot for price, and it wouldn't change this structure, in my opinion. But yeah, I don't want to see these lows get taken out, in my opinion, but it could be wrong. So the euro is still in a range. I think this level is still very good for shorts, especially, you know, if price opens around here with a gap into this high, 140 pip expansion range, weekly range, you can assume that around here the high of the week is gonna happen, because this asset tends to rally 100 to 120 pips on a good week. So 130 pip range extended, and very probability that's going to pull back into the February monthly open, in my opinion. This is not financial advice. So yeah, this is the long scenario I have. Open with a gap, reclaim the new weekly open. In my opinion, enough good reason to trade into filling that gap, reclaim this weekly open. Another factor of confluence, and in my opinion, this is going to attack the monthly open. Now, I don't see a clear short unless we attack this high, and this high is very, 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 very good level. We have this low here before we broke down significantly. It would be if price comes here next week, it's going to be extended already. So that's the thing you want to look for when fading momentum. Yeah, so if it broke, the other scenario is, you know, if it takes out all this price action of all these lows, I would consider it very, very bearish. And also, you know, if you're gonna have a weekly open around here with a gap, and price, you see price trade into that gap, reject. This is very bearish. You can maybe short a retest of the new weekly open into these lows at least, and take into consideration the fact that we have significant inefficiencies here, and the price is likely to trade into them. So a break below the yearly open is another thing I'm looking for. I'm really open to I'm really open to every scenario possible, dude. Like open with a gap here, fill the gap, trade into the monthly open. Maybe there's more reasons to be bullish. We trade here, and then we reject because we are extended. I'm also open to the fact that we could maybe reject from here, and then I don't know what the fuck this week is gonna happen. Gonna look like. Maybe it's another chop fest, a lot of chop, not really inefficient moves. And also I'm open to the idea of, you know, opening with a gap, trading to the gap, fill like half of it, reject, close back below the new weekly open, target here, bounce, break below the yearly open, and you get out here. Just again, it would be, well, maybe you can squeeze it a bit, but yeah, 100 pip move is good enough for a week on the EURUSD. So those are my views on the euro. Hope you find them useful. If not, fuck off. And in the last place, I wanted to cover EURUSD, man, because I still think this is setting up to be a brilliant trade. So as you may know, the Australian dollar has been very, very strong, and we've had 10 consecutive bearish weekly candles, basically undoing all the move that was caused by the tariff announcements and shit like that. I think we're just basically closing all the inefficiencies, and we had massive ones here, but just now very, very similar to Bitcoin, in my opinion. massive sell-off from the highs into a range that led into a breakout, and I think that makes you think that makes me think that the most likely scenario is a bounce towards here. Again, sorry, wrong chart, but you get the idea. Range, breakout, you retest, momentum slows down, and you have bigger inefficiencies here than here. In my opinion, it's much easier to trade into the path to the path of least resistance is to the upside. So that's why I think on EURUSD. Look at that. 1,000 pip drop from the yearly open. 10 consecutive bearish weekly candles into magic trend lines. Beautiful magic trend lines. The origin of a fucking massive leg to the upside. And also the midpoint of a range. So this area here is significant. This trend line is significant. You are oversold. Man, I think just like Bitcoin, you're not gonna short this thing here, not here. So if price comes here, I'm gonna come in blindly and fucking buy it like a man. Like here, like this. And I think, I know the risk reward is not great, but if I see it close below here, I'm gonna get out. Because if I'm right, then price should start reacting positively to this zone. So those are my plans for next week. This was not indeed a brief macro review. So let's make some money this week. See you guys next week.